Good morning, astute investors, and welcome to your Stock Sense Morning Brief. I'm Malik, your guide to the Pakistan Stock Exchange, and today we're unpacking another day of strong gains and pivotal economic news. The KSE-100 is on a roll, pushing higher amidst a confluence of positive developments. So grab your coffee because we're diving deep into yesterday's market action and what it means for your portfolio today. Let's kick things off with a look at the overall market performance. Yesterday, the KSE-100 index continued its impressive upward trajectory, closing at 168,062 points. That's a robust gain of 1,385 points, or approximately 0.8%, marking its second consecutive day of over 1,300-point rallies. This sustained momentum is certainly grabbing attention. Beyond the headline indexed, market breadth was notably positive. We saw 278 advancers significantly outnumbering 162 decliners, with 44 scripts remaining unchanged. This indicates broad-based participation. Trading activity surged with a phenomenal 735 million shares changing hands, reflecting strong investor confidence. The total traded value also climbed, reaching an impressive 46.2 billion rupees. These figures underscore a highly liquid and engaged market. Now, turning our attention to the sectors that shaped yesterday's performance. While the automotive assembler sector exerted a slight drag on the market, the heavyweights stepped up. Oil and gas exploration companies were a major driving force, contributing significantly to the day's gains. Following closely, the cement sector also played a crucial role, providing substantial positive momentum. These two sectors, fueled by various factors we'll discuss shortly, were instrumental in pushing the KSE-100 higher. From a technical perspective, the KSE-100 is flashing encouraging signals. The index appears to be firmly entrenched in a bullish phase, with virtually all short-term and long-term moving averages indicating a buy signal. Looking at key levels for today, the classic pivot point stands at around 163,600. Investors should keep an eye on immediate resistance near 170,050 points, while a solid support level can be found around 160,050 points. This technical setup reinforces a positive outlook for the market in the immediate term. From a corporate front, there are no new dividend announcements or board meetings scheduled for today that are likely to significantly impact market sentiment. Similarly, we have no companies whose last day of entitlement for distributions is today. We'll of course keep you updated should any important corporate news break. Moving on to the economic and market news, yesterday brought a wave of positive developments that clearly buoyed investor sentiment. First, the big news: inflation edged down to 6.1% in November. This is fantastic news, significantly increasing the likelihood of the State Bank of Pakistan considering a policy rate cut in the near future, which could further stimulate economic activity. Adding to the relief, petrol and diesel rates were slashed for the next fortnight. This directly translates to lower operational costs for countless industries, from manufacturing to logistics, and puts more purchasing power back into consumers. In policy news, the finance minister expressed optimism regarding the National Finance Commission's output, specifically highlighting the abolition of the 0.25% export development surcharge. This is a direct and welcome benefit for our crucial export-oriented industries, enhancing their competitiveness. We also saw positive corporate-specific news, with Lucky Cement announcing plans to boost its production capacity in DR Congo. This signals strong international demand and strategic expansion, a positive for the company and the broader industrial sector. Bilateral trade discussions between the Egyptian Foreign Minister and COAS Munir also focused on expanding economic ties, potentially opening new avenues for Pakistani businesses. The textile sector is also showing signs of revival, driven by innovation, promising increased competitiveness and export earnings. And in technology, Pakistan's IT chief called for indigenizing AI models, indicating a forward-looking strategic direction for growth in the tech space. However, it wasn't all sunshine. Concerns were raised about a potato glut, which highlights underlying structural weaknesses in our agricultural sector and an over-reliance on single export markets. Furthermore, important discussions continue around Pakistan's growing population and its long-term challenges for agriculture and industry, underscoring the urgent need for sustainable resource management and planning. My take on the current market dynamics is one of cautious yet clear optimism. The KSE-100's recent surge isn't just speculative, it's a direct response to tangible, improving macroeconomic indicators. The dip in inflation and the reduction in fuel prices are not merely headlines. They are fundamental tailwinds that directly ease cost pressures for businesses, improve corporate profitability, and put more disposable income in the hands of consumers. This environment significantly enhances the probability of monetary easing by the SBP, which historically has been a strong catalyst for equity markets. The robust institutional buying further validates this positive sentiment, suggesting that sophisticated investors are recognizing and acting on these improving fundamentals. While the long-term structural challenges of population growth, climate risks, and agricultural inefficiencies remain critical and require sustained policy attention, the immediate market momentum is undeniably strong. For investors, this suggests maintaining a watchful eye but also recognizing the opportunities presented by this positive shift. Focus on sectors benefiting directly from lower input costs and potential interest rate cuts, such as manufacturing, cement, and potentially consumer discretionary. However, remain mindful of the broader economic landscape and the need for continued structural reforms to sustain this growth in the long run. The current environment offers compelling reasons for strategic positioning. That's all for your Stock Sense morning brief today. Thank you for tuning in and making us part of your daily investment routine. Don't forget to like, share, and subscribe to Stock Sense for daily updates and deeper market insights. Until next time, happy investing!